Hey, what is happening guys? Bitcoin has been trading sideways for almost 3 months. In this video, I will explain why another leg up is just around the corner, then Michael Saylor will explain how Bitcoin might reach $5 million possibly in a decade. This video is brought to you by BlockFi. BlockFi is a crypto platform that lets you leverage your cryptocurrencies and put it to fair use. At BlockFi, you can earn an interest rate on your crypto, buy, sell crypto, and borrow cash. It's like all-in-one crypto bank. You can earn up to 8.6% APY on your crypto holdings, up to 5% on Bitcoin, 4.5% on Ethereum. Now, you can also earn 10% APY in crypto on any new stablecoins for limited time only. You do not have to sell your crypto and pay high taxes. Borrow money against your crypto at rates as low as 4.5% APR. BlockFi uses ACH that allows users to deposit/withdraw funds with no fees. Do you want First Bitcoin Rewards credit card? Join the waiting list and receive unlimited 1.5% back in Bitcoin on every purchase. Sign up today and earn up to $250 bonus when you open an account with the link blockfi.com/aimstone in the description box below. Okay, let's get this show started. Currently, the entire cryptocurrency market is trading under $2.5 trillion. The dominance continues to shift from Bitcoin to other altcoins. Currently, it dropped to 42% or so. It's not all-time low, at least not yet. Ethereum dominance on the other hand continues to increase, and now it reached till 3 years high, slightly below 20%. As of the time of this recording, Bitcoin is figuring around $57,700. It's just slightly positive on the week. I would say almost it's flat on the week. In fact, it has been trading sideways for almost 3 months. Soon I will explain why the next leg up is just around the corner. I think it has not been more exciting time for Ethereum than it is right now. Fundamentally, it's on the right track and the price continues to explode. Ethereum just recently surpassed a huge milestone of $4,000. Only 1 week ago, Ethereum surpassed $3,000. And now it surpassed $4,000? This is insane. But we should expect insanity in this market. Ethereum is up by almost 9% on the day and 40% on the week. Most importantly, its market cap approaching to $500 billion. In the next few days, ETH might be exactly half of the Bitcoin's market cap if it continues to grow in the same manner. Binance BNB doesn't show anything exciting on the week. It's just almost similar to Bitcoin. I would say it's almost flat on the week. Dogecoin has been a wild roller coaster. Dogecoin fans were anticipating some additional pump from Elon Musk when he was hosting SNL last Saturday. But apparently, he did not really say nothing positive to pump up Dogecoin even more. This is why price dumped from 74 cents to the current 49 cents. That's a 35% dump from top to the current price. Do you see the problem with these shitcoins? If pump does not happen, then dump is imminent. It's simply pump and dump scheme. As soon as Elon Musk cashes out and stops talking about this sinking ship, there will be no fuel left to pump that bubble even further, and all those newbies will be carrying bags of worthless shitcoin. However, it will not go to zero. It might drop to another cent or so, stagnate to another few years, and wait for another pump. Cardano looks decent. Just recently it reached new all-time high. It's up by 30% on the week. The biggest pump we are currently seeing is from Bitcoin Cash. It's up by staggering 50% on the week, and it's considered to be the best performing asset in the top 10 cryptocurrencies in the past 7 days. Litecoin is right behind it. It just reached another all-time high, touching $400. It's the second best performing digital asset on the week, right behind Bitcoin Cash. It's up by 43% on the week. Crypto adoption continues to increase among financial institutions. UBS explores offering crypto investments to rich clients. UBS Group AG is in early stages of planning to offer wealthy customers digital currency investments. Joining US firm is seeking to give broader access to response to clients' demand. Demand is indeed going up. The reason why we might see another leg up in Bitcoin's price boils down to this chart. This chart represents all exchanges' estimated leverage ratio. Humans from their nature are not patient creatures. They want to get rich as fast as possible. That's one of the reasons why they buy in Dogecoin. But there is another method to leverage your Bitcoin position 10 to 1, or those who want to blow up their accounts even faster, they can leverage 100 to 1. which means if Bitcoin declines by 1% from the open position, you are wiped out. According to this chart, when Bitcoin corrected by 25% in this recent dip, most of the leveraged traders were wiped out. When leveraged traders get liquidated, they're forced to sell their positions. And sometimes when positions are huge, selling pressure will further push Bitcoin price down. The current leverage position is as low as it was back in July 2020, just a few months before this big run-up. Since most of the leverage traders were wiped out, it takes out of the equation some potential selling pressure, and therefore we might see another leg up. Now let's take a look at this updated Bitcoin price prediction model from Econometric. Currently, we are here at around $57,000 as of the time of this recording. Of course, Bitcoin did not reach 100K back in April, and it will not reach $387,000 by May 12, which is just 2 days from now. However, it is important to remember that this prediction model has dynamic confidence interval with the lower bound and the upper bound. Current Bitcoin price leaning towards the lower bound of this confidence interval. I believe the most likely outcome in the next few months will be something like this. Soon after the last Bitcoin halving, the upper bound of this model increased by a lot, while the real Bitcoin price was wiggling near the edge of the lower bound. But few months later, the mean of the model and the real Bitcoin price converged, and now it seems like something similar is playing out. BTC has been trading sideways for almost 3 months, and it might continue trading sideways around the edge of the lower bound. But then, we might see another big spike in Bitcoin price where the mean of the model and the real Bitcoin price will converge once again. I think the highest chances for this happening is at around September and October. At that time, we might see Bitcoin's price at around $200,000 to $300,000. Now, let's take a look at this most recent video from Michael Saylor, where he explains the future outlook for Bitcoin price and how BTC might be at $5 million in the next decade. Let's take a look.
You mentioned ETFs and you mentioned scarcity, and we could be seeing Bitcoin's ETFs approved in the US, and there is some argument that with Bitcoin ETFs you'll have more Bitcoin derivatives, a bigger Bitcoin futures market, and that could ultimately create paper Bitcoin, which could take away from the scarcity of the Bitcoin market. Do you see that happening? I mean, what is your outlook on the impact of potential Bitcoin ETFs and Bitcoin derivatives being approved?
I think it's natural that you're going to see Bitcoin as the solution to everybody's problem. The big tech companies need an open monetary network to build the next generation of products, so like Square Cash, PayPal, eventually Apple, Google, Facebook. They have to build Bitcoin into their mobile wallets because they need this universal digital asset on a protocol, on a global network. All the finance companies, the insurance companies, the fund companies, etc., they need to build Bitcoin into their finance products. So if you have a savings account without Bitcoin in it, right, the Bitcoin savings account yields 160% a year for a decade, and the other conventional bank savings accounts yield 15 basis points. So it's pretty clear that if you don't have a savings account with Bitcoin built into it, all the assets are going to flow out of your bank. If you're Fidelity or PIMCO and you have mutual funds, you're going to build Bitcoin into your funds. The ETF is the plain vanilla. So Fidelity's filed for a Bitcoin ETF, as have like 8 other entities. But, you know, why wouldn't you build Bitcoin into your bond fund? If you look at the performance of bond funds, they're hideous over the last decade and especially over the past year. If you look at all treasury funds, all treasury applications, if you have a monetary inflation rate of 15% to 20% a year, and we have that right now, and if the treasury yield on most of these funds is 1, 2, 3%, you have a negative real yield of 15%. So you've got a negative real yield on all the cash instruments and all the bond funds that is minus 10 to minus 15% or more. So as a matter of preservation, I think that the solution is you put Bitcoin into the bond fund, you put Bitcoin into the mutual fund, you put Bitcoin into the bank, you put Bitcoin into the mobile app. If you're an insurance company, I'm going to sell you life insurance. I'm going to take your premiums. I'm going to invest them in a swap. A 30-year swap yields, let's think about it right now, 220 basis points, maybe? Yeah, 2.2% interest. That's what I'm going to get. Now, if I invested those premiums in something that yielded 20% interest, presumably the cost of your insurance policy goes down by a factor of 10. Well, Bitcoin's been running a lot more than 20%. So what if I told you I can give you a life insurance policy which costs you 1/20th of your current one? Or what if I told you I'll give you a life insurance policy that pays off 25x more than your current one? Presumably, I'm going to obliterate every life insurance policy, every insurance policy in the world. So the insurance companies are going to want to build a thermodynamically sound asset, a deflationary appreciating asset into insurance, just like the banks need it. Just like if you're going to lend or securitize against it, you want good liquid collateral. Bitcoin's the best collateral you could imagine.
So what is your outlook for Bitcoin then? Because earlier you told me that you don't see any existential threats to it. So where do you see it going?
I think Bitcoin is again, the dominant digital monetary network. And that means that you can expect first thousands and then tens of thousands and then hundreds of thousands of corporations to plug into it. And we should have 250 million people that hold Bitcoin by the end of the year. So I expect 1 billion people within 5 years, and I expect 5 billion people within a decade or so. I think that there'll be 5 billion people or more with mobile wallets, with digital currency and digital assets. And Bitcoin will become the global settlement network and the global synchronization network for all of them. What Bitcoin does is it allows you to establish a trusted relationship with a counterparty, and that means, there's a phrase, the secret to a successful relationship is shared values, and that's the truth with two people, and it's the truth with two companies or two countries. So shared values requires a value network. And so Bitcoin is a shared value network. And I can say, for example, that in 20 years of trying, there's no way that my company could do business in Nigeria. There's no way that a bank in the US can trade easily with a bank in Nigeria or Lebanon or Iraq or between Nigeria or Zimbabwe and Argentina because of the difficulty of establishing trust in the fiat monetary system. So when you establish a digital monetary system, you can establish trust of value in 24 hours. And so what I think will happen is I think we're going to see an explosion of billions of people doing tens of billions of transactions on layer 2's applications that are all synchronized with the protocol of Bitcoin as the layer 1. And I think Bitcoin will just continue to grow as an asset class. It'll be the underlying asset that's used to establish trust across all of these counterparties everywhere in the world in the 21st century.
So what does that mean for the price of Bitcoin? What is your projection then?
Over time, it will go up.
Yes, I got that. How high? Care to give me some kind of number here?
I think that if you look at the $500 trillion monetary planet and the $1 trillion, crypto asset fire burning in the core, you can expect that will continue to expand. It's been expanding pretty rapidly. I think it'll continue to expand as it absorbs the monetary energy of the other store of value assets. So it should slurp all of the energy out of, or large portions of the energy out of the precious metals and then out of monetary indexes and broad money equity ETFs. And so there's no reason why it shouldn't go from $1 trillion to 10 trillion to 100 trillion. Over what time frame? I'm not a trader, so I don't guess by the week, by the month, even by the quarter. I mean, for me, a decade, is a target.
Yes, because ETFs are coming. It's just a matter of time. In fact, this is what happened to gold price when the first Bitcoin ETF was listed on New York Stock Exchange. Just before the gold ETF listing, gold was trading at around $400 per ounce, and now it's near $1,850. That's almost 5x. but of course it took for gold 2 decades to reach this current price. But let's not forget that the time in Bitcoin and the cryptocurrency market is suppressed. In crypto market, 1 year is like 5 years or so in a legacy finance. Speaking of the price, Michael Saylor believes Bitcoin should take a good chunk of precious metals market, indices, equity market, and bond market. $1 trillion is already set. Next up is $10 trillion, followed by $100 trillion, possibly over a decade. $10 trillion would put BTC over $500,000. $100 trillion would put BTC over $5 million. Let me know what you guys think. Will we see Bitcoin at $5 million over the next decade? Leave your thoughts in the comment section below. Smash that like button and subscribe for more videos.